Welcome back. Gautam has been pointing out endlessly that today has been an FMCG day. So we have an expert to take us through what do you do with FMCG stocks. Varun Lohchab, Director, Institutional Equities at Religare Capital, joins us. Varun, before we ask you about the various FMCG stocks and the sector and its performance from here on, your word on PC Jewellers, I would assume that also falls in the broad category of a consumer company. Is it correctly priced compared to its rivals? How would you rate that stock?
Yeah, it's a pretty well priced IPO, I would say. If you look at the fundamentals of the company, the way it's been growing and balance sheet, which is relatively okay. The IPO is coming at around 8 times current year on PE basis, which looks quite attractive compared to most of the peers. And I think if you look at the opportunity space for organized jewelry to take market share from unorganized, especially given the fact that they are strong in diamond jewelry and being present in North India where consumer preferences are fast shifting towards diamond, I think they are pretty well placed to tap on the opportunity.
We recently had another jewelry company, Tara Jewellers. Is this IPO better than that one? People who've already participated in Tara Jewellers, should they look at this IPO? Was that better priced?
See, I think more than pricing, definitely we believe PC Jewellers, has a bigger scale, and in terms of the brand, it's a far more well-known brand. It's obviously a regional brand in North India, but it's a better brand, and in terms of reach, it's better than Tara Jewels, definitely.
Varun, off late, because the market, optimism, a lot of the consumer stocks have been written off for the moment, but it looks like, today HUL is the flavor of the day. What would you recommend? Do you think it's still good to play with these outperformers, HUL, ITC, or would you advise investors to get into the mid-tiers?
See, overall, if you look at FMCG, we have downgraded the sector from overweight, which we were running for almost 2 years, to neutral. Having said that, we are still fairly bullish on the growth prospects for these companies, and we don't anticipate any major earning shocks out there. In fact, the way some of the raw materials are cooling off, we won't be surprised if the Q3 and Q4 margin performance looks quite good from these companies. On individual stocks, Unilever has been one of our top picks for a long time. However, we had recently downgraded to hold as valuations look full around 550, 560 levels. But so is the case with most of the other companies in the space. So I think relatively on the business, like if I have to rate the company on the business, I think they continue to do very well. So we remain positive on the growth prospects in both the segments, soaps and detergents and personal products, and similarly on the margin profile. So compared to a lot of the other stocks, I think valuations are reasonable. So we continue to have a positive bias on Unilever and would advise recommending adding to the stock on any declines.
What about the proper consumer companies, not quite FMCG, but certainly in the broad consumption space, say the VIPs, Titan, I mean that would perhaps fall in the category of the PC Jewellers into some extent. In this space, which used to run up very significantly a year back or maybe 18 months back, in that space, are there any interesting candidates valuation-wise?
See, valuation-wise, frankly, most of the stocks have run up a lot. So even Titan, which we really like and has been our top pick in the discretionary space, along with United Spirits and Bata, for some time. But again, Titan valuations, I won't say that they are very compelling or would give you a lot of comfort. But we remain positive on Titan, given the way the jewelry demand is picking up now, with obviously the festive season being on and the wedding season being on, and from a 2-3 year view, again the way they are expanding their distribution footprint, given the way some of the non-watches, non-jewelry business is scaling up in terms of eyewear and fast track and all, we remain positive on Titan. Remains one of the core holdings, is how we would advise clients. One should keep holding to that name in the consumer discretionary space, and along with that, as I said, Bata and United Spirits we continue to remain positive on.
Okay, Varun, considering both valuation and technical factors, like there could be some buying in ITC because there is a big ETF switch coming up. So, considering all these views between ITC and HUL, which one would you prefer? Going by both fundamentals and these technical factors.
See, between the two, our preference is for Unilevers. We believe that the scope for margin surprise and earning surprise is more in case of Hindustan Unilever compared to ITC. ITC is a great business, but very well understood and very well discovered as well. So we don't believe there are too many triggers in case of ITC on the business side which could surprise positively, apart from the technical factor that you talked about. In case of Hindustan Unilever, if you see, we believe there is a room for margins to keep surprising on the positive side the way they have done in the last 1.5 2 years, if you see. So our bias would be slightly tilted towards Hindustan Unilever at this point of time.
Okay, and among the Daburs and Maricos of the world, your preference, is there any company that you feel has a very good growth profile and upside on margins?
See, in the mid-cap space, our top picks for some time have been GSK Consumer, Dabur and Emami. Having said that, again, GSK Consumer and Emami have run up a lot, and therefore the near term upside in these two look limited, but we still remain positive on both of them, given the growth profile, given the scope for margin surprise in case of Emami and Dabur in particular. So these three I would say as the top mid cap picks. Dabur and Emami in particular look fairly well valued compared to rest of the other mid caps. So a lot of the other mid caps like Marico, GCPL, which are trading at 27, 28 times FY14, compared to that Dabur and Emami are trading at 23, 24 times. So that gives us slightly more comfort on the valuation side.
Yeah, I have two stocks. I don't know if they are in your coverage. TTK Prestige. I mean, it seemed to have given up a lot of its verve, of its excellent verve after the results came in, but then once again it's showing a lot of enthu. Is that a stock you cover? And also TBZ. Actually, we should pull up Tribhuvandas Bhimji, TBZ really. A vertical rally started off about 6 months back. Will PC Jewellers show something like that?
So I think it's difficult to call on how exactly the stock will move in the short run. In case of TBZ and a lot of other jewelry stocks, they have moved very sharply in the last 3 months because after a lull in terms of jewelry demand for almost 4 quarters till Q2 of this year, from Q3 we are starting to see positive commentary on jewelry demand picking up. So therefore all jewelry stocks have been in flavor, and so has been TBZ. Obviously the extent of hike has been higher in case of TBZ, but if you look at TBZ again, a lot of growth expectations are there in terms of new store openings which they have to deliver on. Compared to that, I think in case of PC Jewellers, you are already at 30 stores and you are looking to add only 20 in next 2 years. So even from a execution point of view, I think the risks are slightly lower in case of PC Jewellers.
Fair enough. And you don't cover TTK?
Yeah, TTK we don't cover, but we have been tracking the stock on a soft coverage basis. Obviously Q2 was a bad quarter, and the stock really came off post those results, but a lot of those issues were one-off, like the induction cooktop issue, especially the problems they faced in Tamil Nadu. So I think those should even out in a quarter or two. Having said that, we don't expect that the growth will go back to those 30-40% levels where they were around 12 months back, but things should improve compared to Q2 levels. So I think therefore the stock is starting to price in improvement compared to last couple of quarters.
Fair enough. We'll have to leave it at that. Varun, thank you very much for joining us with that comprehensive analysis of consumer and FMCG stocks. Take a break. We'll be back in a minute.